A tired person rushes to work on a Tuesday morning. They decide to treat themselves and pull into a drive-thru. They order a mediocre latte and a breakfast sandwich. Cashier tells them the total is $7.50. They tap their card to pay for the food. They receive their coffee and sandwich. They drive away and continue with their day. 2 days later, the person checks their banking app on their phone. Their eyes widen in shock as they see a charge of $42.50 for the sandwich. A graphic shows the $7 coffee transforming into a solid gold coffee cup. A notification pops up showing their account balance was only $5. A pop-up explains the $35 overdraft fee added to their purchase. Nick appears and begins explaining the situation.
Ow.
Nick says, if you had $10,000, the bank would treat you differently. A visual shows a wealthy person receiving a thank you note and interest from the bank. A middle-class person is shown struggling to pay bills and being charged fees. Nick states, it's expensive to be poor. It's surprisingly expensive to be middle class. Montage of money counting machines. Montage of various bank logos. A montage of frustrated people looking at laptops and phones. Nick introduces himself as someone who studies the banking system. Nick encourages viewers to subscribe and like the video. Nick announces the topic: the poor tax and 7 bank fees targeting the middle class. Nick sits at his desk and leans into the camera. Nick promises to explain the math, psychology, and how to opt out of the system. Nick begins part 1, the philosophy of the poor tax. Nick explains why banks charge these fees. Nick references the boots theory from Terry Pratchett. Animation shows a rich man buying $50 boots that last 10 years. Animation shows a poor man buying $10 boots that fall apart every season. Visual tally of the poor man spending $100 over 10 years with wet feet. Nick compares the boots theory to modern banking fees. Nick explains that high account balances mean waived fees. Low balances mean more fees. Nick states this is a deliberate business model. Graphic shows U.S. banks collecting $11 billion in overdraft fees in 2019. A pie chart shows 9% of account holders paying 84% of those fees. Nick explains that struggling people subsidize free accounts for the wealthy. Nick prepares to break down the 7 bank fees. Nick introduces fee number 1, the predator overdraft fees. Nick stands by a whiteboard and writes $35 in big red numbers. Nick explains the overdraft fee using the coffee example. Nick calculates the APR on a $35 fee for a $5 loan. Graphic explodes with 17,000% flashing on screen. Nick compares bank fees to loan sharks. Nick explains the psychology. Shame and guilt prevent people from complaining. Nick suggests turning off overdraft protection. Nick reassures viewers about the embarrassment of a declined card. Nick recommends linking a savings account for free transfers. Nick introduces fee number 2, the minimum balance maintenance fee. Nick holds up a standard big bank fee schedule. Nick explains the $12 monthly fee unless you maintain a $1,500 balance or $500 in direct deposits. Nick calculates the negative return on keeping $1,000 in the account. Nick leans in and compares negative returns to positive investment returns. Nick addresses objections about needing a physical bank branch. Nick asks when viewers last visited a bank branch. Nick lists alternatives: online banks, credit unions, fintech apps with 0 fees. Nick declares that paying monthly fees for checking accounts is a scam. Nick introduces fee number 3, the double dip, to the audience. Nick describes being at a concert, bar, or street fair and needing cash. Nick spots an ATM that isn't his bank and decides to use it. Nick inserts his card into the ATM. The ATM displays a message. This machine charges a $3.50 fee. Nick sighs and clicks accept on the ATM screen. Nick explains that most people do and realize their own bank also charges a fee for using another ATM. Nick illustrates with a drawing, 2 stick figures taking money from one wallet. Nick states that people end up paying $6 to access $20 of their own money. Nick explains that this is a 30% tax on personal liquidity. Nick contrasts wealthy people with premium accounts who pay $0 in ATM fees. Nick describes a wealthy person withdrawing $500 for a steak dinner and paying no fees. Nick describes a regular person withdrawing $20 for a cab ride and paying $6 in fees. Nick offers a solution: get a checking account that reimburses ATM fees. Nick lists banks like Charles Schwab and Ally that offer ATM fee reimbursement. Nick urges viewers to stop accepting ATM fees as normal. Nick introduces fee number 4, the paperweight fee statement fees. Nick expresses frustration over banks charging $2 or $3 a month for paper statements. Nick mocks the justification. That's just the cost of postage. Nick calls it a tax on the disorganized and the elderly. Nick holds a piece of mail and tears it in half to illustrate his anger. Nick introduces the darker side, inactivity fees. Nick describes someone responsibly putting $200 in a savings account and forgetting about it. Nick explains that after a year of inactivity, banks start charging $5 to $10 a month. Nick describes the account being drained to zero and closed by the bank. Nick emphasizes that banks punish people for saving and not spending. Nick gives an action step. Log into your account and turn on paperless statements. Nick advises setting a calendar reminder to log into emergency savings every 6 months. Nick suggests moving $1 back and forth to reset the inactivity clock. Nick introduces fee number 5, the opportunity cost, the invisible fee. Nick explains that this fee is not on your statement and is the most dangerous. Nick describes the high interest spread. Nick presents a split screen. Big bank checking versus high yield savings. Nick describes a diligent saver with $10,000 in a standard big bank savings account. Nick explains the bank pays 0.01% APY, earning just $1 in a year. Nick contrasts this with high-yield savings accounts paying 4.5% to 5.0%. Nick shows that $10,000 in an HYSA would earn $500 in a year. Nick explains the fee as the $499 not earned by keeping money in a low-interest account. Nick reveals the bank invests your money, earns $500, gives you $1, and keeps $499. Nick calls this a tax on knowledge and highlights the importance of knowing about HSAs. Nick introduces fee number 6, the convenience fee trap. Nick describes paying rent or utility bills online and encountering a $15 processing fee. Nick explains foreign transaction fees when buying from European companies. Nick details foreign transaction fees. FTFs are usually 3%. Nick gives an example. Spending $3,000 on hotels and flights incurs a $90 fee. Nick contrasts rich people with travel cards that have no foreign transaction fees. Nick explains middle-class people often use cards with the 3% surcharge. Nick discusses the psychology of paying convenience fees due to exhaustion. Nick describes clicking pay with card and accepting the $15 fee for convenience. Nick calculates that paying this fee monthly for rent adds up to $180 a year. Nick offers a fix. Check your cards for foreign transaction fees and label them US only. Nick advises linking your bank account AHA for bill pay instead of using a card. Nick draws a flowchart to illustrate the snowball effect of late fees. Nick describes a middle-class family missing a credit card due date by 1 day. Nick explains they get hit with a $40 late fee. Nick describes the APR on the card spiking to the penalty rate of 29.99%. Nick explains losing the interest-free grace period and paying interest immediately. Nick describes the credit score dropping and car insurance premiums increasing. Nick emphasizes that one $40 fee can cost hundreds or thousands over 2 years. Nick contrasts the rich perspective. Wealthy people call the bank and get the fee waived. Describes the bank's response to wealthy customers. Absolutely, sir. Taken care of. Nick explains that low-balance customers are told, sorry, it's company policy. A visual of a calendar with money flying out representing hundreds of dollars lost to bank fees each year. A pie chart appears showing 60% of Americans staying with the same bank for over a decade. Unhappy customers are shown standing in line at a bank, looking frustrated. A thought bubble appears above a customer's head. Imagining the hassle of switching banks, changing direct deposits, updating Netflix payment, relinking Venmo, a montage of paperwork and digital forms piling up, symbolizing the overwhelming feeling of switching banks. Bank executives are shown in a boardroom, smirking as they count on customers' laziness and exhaustion. A customer looks at a bank statement, frowning at a $150 annual fee. Scale appears with 2 hours of paperwork on one side and $150 in fees on the other, fees outweighing the paperwork. Nick appears, speaking directly to the audience. Reassuring them, he understands their reluctance. Flashback. Nick sits at a desk, looking annoyed as he reviews a bank statement showing a $12 monthly fee. A montage of small fees adding up. $5 here, $10 there, accumulating into a large sum. A calculator on screen totals up all the fees, showing a significant annual loss. A stack of cash labeled high-yield savings grows as fees are eliminated. A visual comparison. Old account with fees versus new account with savings, showing a swing of $500 to $1,000 per year. A hand offers $1,000 in cash to the viewer. With a sign reading 2 hours of paperwork, a clock ticks, emphasizing the value of $500 per hour for switching. Nick presents the action plan on a digital checklist. Step 1. The audit. A person pours a glass of wine or coffee, sits at a table with 3 bank statements. The person highlights every fee on the statements. Maintenance, ATM, foreign transaction, overdraft. A calculator adds up the fees. The total is circled in red.
Ow.
The person's expression changes from surprise to anger.
Ow.
Step 2. The call. The person picks up the phone, dials the bank. A speech bubble shows the script. I see $60 in fees. I can get a free account at competitor bank. Can you switch me to a no-fee account and refund these charges? A bank representative on the other end looks hesitant. The customer listens, then hangs up with determination. The customer packs up their things, ready to leave the bank. Step 3. The switch. The customer opens a laptop and researches credit unions and online banks. A checklist appears. No monthly fees, no minimum balance, ATM fee reimbursement, overdraft protection transfers. The customer selects a new bank and begins the online application. Step 4. The buffer. The customer transfers money, creating a $500 buffer in their new checking account. A graphic shows the buffer as a safety net, with $500 marked as the new $0. A scenario plays out. The account balance dips to $520, and the customer feels secure. A warning flashes. If you dip below $500, you are broke. A montage of avoided overdraft fees thanks to the buffer. Nick stands up, looking resolute. A visual of the financial system as a machine, extracting wealth from people. A label appears. Friction tax and attention tax over the machine. The machine grinds to a halt as the customer opts out. Nick addresses the audience, encouraging them to understand the game and stop playing by the bank's rules. A customer almost pays a $35 overdraft fee for a sandwich, but catches it in time. A close-up of hard-earned money being protected. Text appears on screen. Which fee do you hate the most? Enact invites viewers to share their stories in the comments. A montage of comment bubbles popping up with stories of ridiculous bank fees. Nick encourages viewers to like the video to help the channel. A graphic of the YouTube algorithm as a slot machine with likes as the currency. Nick points to a recommended video on high-yield savings accounts. A thumbnail of the recommended video appears on screen. Nick thanks the audience for watching. Final message. Don't just work for your money. Make your money work for you. Nick waves goodbye,